Hey everyone! Welcome to my channel. My name is Rena, but you can call me Mrs.NoBody. I'm so glad you're here. When the US dollar gains strength, the financial markets react in unexpected ways. This week, we explore what happens to gold, Bitcoin, stocks, and major currency pairs when DXY moves. Using the Elliott Wave Principle, we will uncover the deeper trends, adding new experience and exploration to our market knowledge. Patience and confirmation are key. Wait for the green light before making big decisions. On the monthly chart of the DXY, we can see a clear impulse pattern, meaning the market is moving in a strong, structured trend with 5 waves. This suggests a dominant direction, likely setting up for the next big move. The impulse pattern on the monthly DXY chart follows the 3 basic Elliott wave rules. This means the structure is valid. Now, based on wave theory, after a completed impulse, the market typically enters a corrective phase. In this phase, we expect at least 3 retracement waves moving against the main trend before the next big move takes shape. This analysis focuses on the bearish scenario, where the market is expected to complete at least 3 corrective waves during the correction phase. Let's break it down and see how this unfolds. Another possible scenario is that the US dollar index remains strong and continues its bullish trend in the long term. Let's explore this bullish scenario and see what it could mean for the market. Now, let's analyze the daily chart. If a double zigzag pattern is forming, it could signal a deeper correction before the uptrend continues. In this bullish continuation scenario, we expect some form of corrective pattern to develop around the current price level. Once that happens, the US dollar could regain strength and resume its upward movement with strong price action. In the gold market, the previous peak has been broken, which raises the possibility that Wave 4 should follow Elliott Wave guidelines. If the structure remains valid, Wave 4 should reverse soon. Since Wave 2 was a deep correction, Wave 4 is more likely to form a sideways pattern, such as a flat or even a triangle. This idea aligns with the expectation that Wave 4 corrections often take a lateral structure rather than a sharp decline. On the 4-hour chart, there is still a possibility for a sideways pattern to develop. However, the key question is whether the market will remain volatile around the current price or if it's preparing for a sharp decline. The next move will determine whether gold continues its uptrend for a longer period or completes the correction with just 3 shallow waves. It's important to wait and observe how the market reacts before confirming the next direction. Now, let's look at the long-term bullish scenario for gold in Wave 5. Since Wave 4 formed a triangle pattern, this setup suggests that Wave 5 could be the strongest and longest wave of the entire trend. If this scenario holds, we may see a powerful upward move as the final leg of this structure unfolds. Now, let's analyze the bullish scenario on the 4-hour chart to see how the price action should develop. We'll look for key patterns and confirmation signals to determine whether the uptrend continues and how the structure unfolds from here. Let's analyze Bitcoin on the weekly arithmetic chart to understand how the bull market should progress, assuming we're in a larger third wave. The third wave is typically the strongest, so we'll focus on how the market structure is developing and what to expect in terms of momentum, key levels, and possible corrections. This could help us predict the potential path forward for Bitcoin. Let's also look at the daily chart of Bitcoin. In this scenario, Wave 5 is expected to be larger than Wave 3, which could indicate a strong continuation in the bull market, with prices moving higher within a significant range. However, it's important to consider that the strengthening of the DXY could have a negative impact on cryptocurrencies, leading to a sharp drop across the crypto market. This could create a positive and negative correlation with other markets, so we need to stay cautious and watch for any shifts in market behavior. For Euro to US dollar, the bullish continuation scenario may extend for at least one more wave to complete the zigzag pattern. We'll keep a close eye on its progress and analyze the development together to see whether the pattern holds or evolves. On the 4-hour chart, I'm watching for signs of the bullish trend continuation. The key factor here is that price should not break the invalidation level. This would signal a shift in market structure. Instead, after completing 3 corrective waves, we expect the market to regain momentum and resume its bullish price action. This analysis focuses on a possible Eurist reversal if the DXY strengthens. The key difference between these two scenarios is time, whether Eurist experiences just 3 waves of bullish momentum as a short-term move or extends into a longer-term trend. Ultimately, both scenarios point in the same direction, but their impact depends on how long the movement lasts. We're now focusing on pound-dollar within a long-term bullish scenario to analyze how the price action should unfold and what key levels to watch in this potential uptrend. On the 4-hour chart of pound US dollar, I'm analyzing a possible wave, C, flat pattern. The key takeaway here is that the current three-wave price action should be completed before the market resumes its bullish movement. It's also crucial to maintain the key invalidation level, as breaking it would change the outlook of this analysis. Now, let's look at the bearish scenario for pound US dollar on the daily chart. This analysis considers a multiple zigzag pattern with an 11-swing correction. If the US dollar index strengthens and enters a bullish market, this bearish scenario for pound US dollar is likely to play out. For Brent Crude Oil, in the bullish scenario, the current wave count suggests a larger degree wave 2, resembling a triple zigzag. The double X wave forms a triangle pattern. However, if the 1 and 2 and 1 and 2 patterns or a leading diagonal do not form at the current price, there might still be one more wave down. It's essential to monitor the key invalidation level to determine whether the analysis holds or needs adjustment. The bearish scenario for the Euro-JPY market suggests the formation of a regular converging triangle pattern. If wave D breaks, it could signal confirmation for the next price action. Any further corrective pattern might lead to more declines. It's important to stay cautious and monitor the market closely, as these setups can be tricky. Pound yen is in a similar position, with wave B forming a regular converging triangle. The key signal for a bearish market would be a break of wave D, which would confirm further downside movement. Additionally, before the larger decline, the market should form shallow corrective patterns in the direction of the advance. However, since wave D has not yet been broken, it's important to wait for confirmation before considering the next move. Let's take a closer look at silver on the daily chart and analyze its potential movements. First, I'll share the second idea, a corrective structure forming on a larger scale. This will help us understand the broader market behavior before diving into the details. Wave A signaled a price decline, and there is a possibility that the market is forming a sideways corrective pattern. If gold also develops a sideways structure, then silver will likely follow a similar path. In that case, we can expect one more bearish wave before the correction is complete. This is the bullish continuation scenario for silver, but it's crucial to focus on key details. For example, we must monitor the key invalidation level and the conservative confirmation price, which hasn't been validated yet. Once the price breaks through that level, a corrective pattern should develop relative to the previous advance. Only after this correction completes will the move become valuable for trading in the bullish direction, a critical point to keep in mind. On the Nasdaq 100 daily chart, we're observing an impulse pattern in progress, which could eventually lead to the formation of an ending diagonal. At the current price level, the market is likely entering a corrective phase for Wave 4, either at this price or with a slight move higher. If the price does not enter the first wave boundary, the market could continue as an impulse pattern. However, if the price breaks into that boundary, it would signal the formation of an ending diagonal, indicating the conclusion of the current trend and the start of a larger correction. It's crucial to monitor these potential shifts, as they will play a significant role in determining the next phase of price action. To get a clearer picture, we'll relabel the third wave on the daily chart and refine the wave count. As long as the market corrects within the range of 23.6% to 38.2% of the third wave, we can still consider it part of the impulse pattern. However, if the correction exceeds this range, it may signal a deeper decline, potentially shifting the outlook to a more complex corrective phase. Monitoring this correction zone will help refine the forecast for the next move. The financial markets are always evolving, and DXY's strength could trigger major shifts across assets. Stay informed, trade wisely, and trust the Elliott Wave roadmap. If you found this analysis valuable, don't forget to like, comment, and subscribe for more insights on the markets every week.